What's up, everyone? Brand the Mortgage Man here, and I've helped more than 10,000 home buyers over my 20-plus year career, putting me in the top 1% of loan originators nationwide. And I'm often asked, what type of loan is better? FHA or conventional? And the answer is that they each have advantages and disadvantages. In this video, I'm going to discuss some of the key features and differences between FHA and conventional mortgages in order to help you determine which better suits your needs. So let's get into it. So let's talk about FHA mortgages first. An FHA mortgage might be a better option than conventional in certain circumstances. I'm going to discuss the reasons why. For one, lower credit score requirements. FHA loans are often more lenient with credit score requirements compared to conventional loans. If you have a lower credit score or a limited credit history, you might qualify for an FHA loan more easily than a conventional loan. This can make an FHA loan a good option for first-time buyers or those with less than perfect credit. Smaller down payments. FHA loans typically require a lower down payment than conventional loans. With an FHA loan, you can often put down as little as 3.5% of the purchase price, whereas with a conventional loan, you're usually required to put down at least 5%. This can make homeownership more accessible if you have limited savings. Higher debt-to-income ratios. FHA loans tend to be more flexible regarding debt-to-income ratios, or your DTI. This measures your monthly debt payments against your income. So if you have a higher debt-to-income ratio, an FHA loan might be easier to obtain than a conventional loan, which often has stricter DTI requirements. Now, let's compare this to conventional mortgages. Why would someone consider a conventional loan? Well, conventional loans have their advantages as well. If you put down at least 20% on a conventional mortgage, you do not have to pay mortgage insurance. Where with an FHA loan, mortgage insurance, or MIP, is required for the life of the loan, and that can increase your overall loan costs. So avoiding PMI, or mortgage insurance, with a conventional loan can save you money if you can afford a larger down payment. Higher loan limits. When you're getting any type of loan, there are loan limits depending on the county in which you're purchasing. Conventional loans have higher loan limits compared to FHA loans, especially in high cost areas. So if you're looking to buy a more expensive home that exceeds the FHA loan limits, a conventional mortgage might be necessary. And conventional loan limits vary by location, as I mentioned, based on the county, but they're generally higher in areas with high real estate prices. More flexibility on property types. Conventional loans offer more flexibility when it comes to the type of property and their condition. FHA loans have stricter property condition requirements and certain restrictions on the types of properties that they can actually finance. Conventional loans might be better suited for properties that don't meet FHA standards, such as investment properties or homes in need of significant repair. Another big one when it comes to financing and the types of properties is condominiums. In order to finance a condominium with an FHA mortgage, that property needs to be on the FHA approved condo list, or you need to submit for a single unit approval, which is extremely difficult because there are stringent requirements when it comes to FHA condo financing. On the other hand, you can easily finance a condo using a conventional mortgage. You also have the potential for better rates with higher credit scores getting a conventional mortgage versus an FHA mortgage. And borrowers with excellent credit scores can actually receive these better rates with conventional compared to FHA loans. And the reason being, FHA loans often have set terms and conditions. And while they're more lenient for those with lower credit scores, borrowers with higher credit scores might find better rates in terms if they go with a conventional mortgage. So in summary, FHA loans can be advantageous for borrowers with lower credit scores, limited down payment funds, and higher debt-to-income ratios, while conventional mortgages can be more advantageous if you have a large down payment, need a higher loan limit, or are purchasing a property that doesn't meet FHA criteria, or have a strong credit profile that qualifies you for more favorable rates using a conventional loan. Each type of loan has its own set of benefits and limitations, so it's important to evaluate your specific financial situation and goals with your lender. If you find this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages. And make sure to leave a comment below if you have questions about your own scenario. I reply to 100% of the comments left on my videos.